today's overlooked stock is a clear winner. George Tsilis, our senior markets correspondent, taking a look at the revolutionary business of eye drops. George, Bausch Lomb. I didn't even know that they were publicly traded, but I, like seen these commercials on during Price is Right.
Yeah, look, I mean, you talk about an old legacy company, and this company's been around since the 1850s. And you're right, they are essentially a brand that we well recognize in the eye care business, but they also have essentially an integrated optical solutions business, which includes medical devices and surgery care, as well as the traditional eye drops, which a lot of us have used in the past, or for the most part, we know are recognized. But I think, if you look at the stock, from a historical standpoint first, a little bit of a complicated story, but it was recently a publicly traded entity that was spun off from Bausch Healthcare, which is essentially a larger company that spun Bausch Lomb off. And this is back in May of 2022. But after going through and sort of discovering what Bausch Healthcare is essentially a generic drug manufacturer that was the former Valiant Pharma. I don't know if you remember the old Valiant Pharma days. This goes back to, I believe, 2015.
I know.
Where, the company essentially was ensnared and embroiled in some price-fixing scandal, which really took down the stock quite considerably. So they basically rebranded themselves as Bausch Healthcare. And essentially, as a way to alleviate some of their debt concerns, they actually spun off Bausch Lomb, which is the eye care business, back in 2022. So today, just to point out, there was a little bit of a move in the underlying stock today based upon the expectations, or potentially now the speculation that Bausch Lomb is now going to be sold off, or potentially being solicited for sale. Particularly interesting enough, if you look at Bausch Healthcare, that stock also rose about 10%, as it should, because if you look at the ownership stake, Bausch Healthcare, or BHC, actually still owns about 88% of the underlying BLCO shares. So essentially, it looks like this is a deal to potentially raise some cash to pay down some of the debt for BHC, which is Bausch Healthcare, which if you look at the market cap of that company, which again is the former Valiant Pharma company, is only about $2.5 billion, but they have a blistering amount of debt of around $21 billion.
Wow. So this is a work in progress, to say the least.
Yes.
Okay.
To say the least, yes. It's really complicated, and really what's happening here is, in my anticipation or view, is BLCO, when this company was spun off at an IPO, it seems to me that for some reason they weren't able to issue some debt. In other words, help lever up that company to essentially buy back some of the shares, which then, of course, would be repatriated in sale for BHC. So, in other words, what I'm trying to say here is it looks like BLCO doesn't have the debt to equity structure as bad as BHC. And it seems like BHC is really struggling to pay down a lot of its debt, because essentially, just to give you some context here, BHC actually paid close to $2 billion in interest on the debt, and its total market capitalization is only $2.5 billion. And so I think they're reaching here because they're really struggling. BHC is now using BLCO, or Bausch Lomb Eye Care Company, as a way to, of course, raise some capital.
I see. Okay. All right. No pun intended. All right. Makes sense. So right now that it's kind of cleaning itself up and, finding sort of a core suite of products to kind of drive the debt pay down, essentially. Last thought,
correct.
Real quick.
And so, if you may, I was going to say, if you look at the price action today, just to give you some context, Bausch Lomb itself is actually expected to be profitable on an EBITDA basis in 2025. And if you look at the 86 cents a share they're estimated to earn with 350 million shares, priced in equity, it's around $17. And we can see that the stock itself is trading right around that level. But the enterprise value of the underlying business altogether is about $9.9 billion, including BLCO's debt, which is about $4.5 billion. So they're in a better position. Let's put it in that context. BLCO is debt to equity wise, they're actually under one in terms of those ratios. And so they're looking for, of course, this business as being a cash cow to service some of the BHC debt.
Understood. Okay. All right. Nice. So they found their engine to keep the
correct
keep the debt under control. Thanks, George. Nice. All right.